there, this is Kat Sklar with the Friendly Spreadsheet, and I'm here today to walk you through how to use the tax withholding calculator to estimate your self-employment tax and your federal income tax, even if you don't have a job withholding tax from you. So, some ground rules. This is a scenario that assumes that you are a single filer and that your only tax complication that's happening in your life is self-employment income, meaning you either own a single member LLC, or that you're a sole proprietor, which means that you are self-employed and you don't have a formal business structure besides just existing as a business. Okay, those caveats aside, let's go. So this is the IRS withholding calculator front splash screen. It's currently at irs.gov/individuals/tax-withholding-estimator. And we're going to plunge right in. It's going to ask you what your filing status is. Use what is true. Even if you do not have a job, you are going to say yes to this question that asks if you have one, because if you say no, it will tell you you can't use the calculator. Check any that apply, carry on to the next. Okay, so if you don't have any jobs on your tax return, you or your spouse, if you're filing jointly, you're going to make one up at this point. And you are going to say that you have a salary, that it's going to pay you all year, and that it pays you once a month. You're going to say your most recent pay period was the end of last month. So in my case, I'm recording in June. So we're going to say it was the end of last month and that you got paid on the last day of your pay period, that you get paid $1 per pay period, and you're going to use the number of months that have finished in this year. So I'm recording in June, so there are 5 complete months. I'm going to say there were 5 year to date. And the IRS is saying, cool. So your total income from your job is going to be 12. And you're like, yes, exactly. And I didn't pay any federal taxes, and I'm not going to pay any federal taxes because this is a fake job. We don't have anything to check on these boxes. Now we're getting to the good stuff. We're going to enter our net self-employment income. What the IRS is asking you here for is your net profit. And as a quick reminder, when you're calculating your net profit for federal tax purposes, the amount that you pay yourself, assuming that you own a single member LLC or you're a sole proprietor, you don't get a deduction for federal taxes or for state income taxes for this purpose. So this is your business income less your business expenses. And even though paying yourself is totally an expense, it's not a business expense for tax purposes. I know it's crazy, but it is what it is. After income and expenses, not including paying myself, I made $16,000. For this example, we're not going to add any other complications. A little aside here. So if you were doing this in the middle of the year, you've got 2 options, and I recommend you use both of them to sort of set your expectations. So you can either use just what you've earned year to date as your net profit, or you can take your year to date, divide it by the number of months that have happened so far this year, and multiply it times 12. So that's called annualizing. It's saying, what if what had happened so far was representative of what would happen for the rest of the year, and figure out what that amount would be and use that as your net profit. So either you want to use your year to date or your annualized total here. Your year to date will give you an amount that you need to have saved now or may need to pay in as estimated taxes. Using your annualized full year will let you know what you should be targeting, and then you can sort of back into what you need to save. If you go year to date without looking at that annual picture, you'll notice that each time you come and do this, the amount of tax each quarter that you need to do is more. And that's because we have a progressive tax system. So that means that the last dollar you earn in the year is likely to be taxed at a higher rate than the first dollar you earned in the year. So looking at your year to date and at your full year will give you an idea of how much you should be setting aside, looking at your annual income, even though the only thing that's certain is what has already happened, not what's going to happen in the rest of the year. And gosh, isn't that a truism for 2025? Okay, so in this case, I'm using my full year to date. I'm saying I haven't paid in anything yet. If you have put in estimated tax payments already, you want to put them here. And you're going to go to next. A nifty thing about this calculator is it will go ahead and when you tell it you have self-employment income, it will take care of the thing where you take half of the self-employment tax it calculates and it becomes a deduction. Like it takes care of all of that. It's quite nice. So we're going to carry on past the adjustment screen. We're going to say just use the standard deduction. Most people do, at least through 2025. There's not likely to be any tax credits unless you have kids, in which case do talk through the kids section. And here we go. Now I calculated this with a professional grade tool, and the total tax before credits was $2,366. So good job, IRS. Very close to what I came up with a more precise tool. And it's giving us a helpful little message that says, hey, like you're with your fake job, you can't withhold enough income tax. You need to pay estimated taxes, which is true. So that's how you use a fake job to make the IRS withholding calculator work for you as a person who only has self-employment income.